Good afternoon, and welcome back to HealthLeaders, the Winning Edge program, a series of webinars touching on the topics and strategies that you need to know most. My name is Marie DeFreitas, and I'm the CFO editor for HealthLeaders, and I'm going to serve as your moderator for today's session. So today's session is titled The Winning Edge for Sustainable Financial Resilience. So thank you to our audience for participating. Before we get started, for those of you in our live program, I just have a few housekeeping details. Just note that an on-demand version of the program is going to be available on our YouTube channel on Friday, and that can be accessed through our website, healthleadersmedia.com. To make sure that everyone can see all the content for the event, please maximize your event screen windows and just make sure your computer volume settings are adjusted for optimal sound quality. Next, you're going to find a resources list for today's webinar on the upper right-hand corner of your screen. Here we have listed the webinar slide deck, along with some additional materials for you to download. At the bottom of your console are going to be multiple widgets you can use. If you want to submit a question, you can click on the little Q&A widget, which may be open and already appear on the left side of your screen. You can submit questions at any time during the presentation, which will remain anonymous. However, just note that it's probably likely your questions will not be answered until the end of our program in the Q&A portion. So lastly, if anyone has any technical difficulties during today's program and you need assistance, just click on that little help widget, which has a question mark icon, and that will cover all your common technical issues. So now it's my pleasure to introduce our panelists for today's discussion. First, we had Brad Hipp, who is the Vice President and CFO of Tucson Medical Center, and we have Rob Tonkinson, who is the Senior Vice President and CFO of Centra Health. Thank you both for joining today's discussion. And with that, let's get into it. Firstly, if both of you could just tell us a little bit about yourselves and your organization. Rob, do you want to go first?
Sure. Thanks, Marie. Good afternoon, everybody. Like Marie said, I'm Brad Hipp. I serve as the Vice President and Chief Financial Officer for not only Tucson Medical Center, but for all of our hospitals and facilities and care units as part of TMC Health in Tucson, Arizona. I've been in Tucson myself about 7 years now, the last 2.5 years or 2 years with TMC Health. We are an independent healthcare facility and system in a growing system in the desert Southwest. Prior to coming to the Tucson area, born and raised in Chicago, spent time at Loyola University Medical Center and Edward Hospital in Naperville, Illinois.
Awesome. Thank you, Brad. Rob, what about you?
Yeah, I'm Rob Tonkinson, CFO here at Centra Health. We're based in Lynchburg, Virginia, which is in South Central Virginia. We are a 4-hospital system, also independent, about 762 beds and 500 employed physicians and advanced practice professionals. We do cover a rather broad area, about 9,000 square miles in our service area, with only 480,000 people. So we are quite rural, have about 1.4 billion in revenue and a number of joint ventures, including an ASC, a new behavioral health hospital that we opened this month, and a acute rehab hospital that we're opening next month, and then a freestanding emergency department, urgent care center that we're going to be opening in 2027. So been in the industry almost 40 years, and also was not far from Brad in Champaign-Urbana, Illinois for about 10 years. And so anyway, I've been around a long time and glad to be here.
Awesome. Yeah, great to have you both. Thanks for joining. So firstly, so we're talking today about sustainable financial resilience, which I feel like is a big topic specifically in today's market and industry environment. So I wanted to ask, how has both of your definitions of financial resilience kind of evolved over the past 3 years? And what metrics or indicators are kind of telling you that your organization is becoming truly resilient? Brad, do you want to start us off?
Sure. Yeah, absolutely. For really over the last couple of years, the definition on how we look at financial resilience has really become less about recovering margin and more about really trying to preserve our strategic freedom, especially as an independent facility. To me, resilience does mean, you have the balance sheet strength, the capital discipline, the operational agility, as well as really important, the leadership alignment to keep investing in the things that matter the most, which is access for our patients in our community, quality, which drives everything, our continued growth along with workforce stability and community impact, even during a volatile environment. Really the biggest thing or the biggest shift has been recognized that this resilience is not just in pockets, it's enterprise-wide. It's not a single financial metric, and it really shows up on how we deploy our capital, how we can act quickly and on different performance variation, and how we can manage our liquidity, and how also the clinical, operational, administrative leaders align around all these difficult trade-offs and things we're faced with.
Awesome. Yeah. Strategic freedom. I like that. Rob, what about you?
Yeah, I love that definition as well, strategic freedom. And I think Brad also touched on balance sheet strength. You know, when things get volatile in the industry, there's nothing like having available resources so that you can weather that volatility and don't have to take sort of panic-driven actions. So I think that's a really important part of resilience. I think having a clear idea of where you're going is important, really understanding. And what I think has come to me more over the last 3 years is really understanding what the core of the organization is, what the community really needs, what we really need to be providing and are the only ones who can provide in the communities we serve. And we are the sole community hospital in 2 of our communities. So a lot of those hospital services are there, but there's a lot of things that we've gotten into over the years that aren't necessarily core. And being able to make sure you understand what the core functions of the organization are and what you really need to deliver for your communities, to me, is really important. And having the reserves to preserve those most critical things during volatile times and payment cuts like we're anticipating with HR1, I think is really central. And the ability, as Brad talked about, the organization-wide ability to adapt and to be constantly improving performance in order to maintain operating margins in the face of the challenges and changes that are coming to the industry fast and furious.
Definitely. Yeah, I hear a lot of CFOs talking about really being attuned to your community's needs in today's market being especially important. And it's definitely nice having the luxury of not panicking, right?
Yes.
Yes.
So can both of you talk to me a little bit about what frameworks do you use to prioritize your capital deployment, and how do you balance your investments in growth and infrastructure and technology and workforce needs? I know there's a lot to be juggled, especially today. So what are your thoughts there? Brad, do you want to go first?
Sure. We've really kind of moved away from, I think, the traditional mindset of looking at things project by project to more of a portfolio mindset. And really, probably the best way I can describe it is our capital allocation and how we prioritize things. It's really the clearest expression of our strategy. That, you know, eventually every strategy becomes a funding decision. It's trade-offs, trying to decide whether we're going to do this, we're going to do that. And, you know, the first thing is looking at that through the strategic filter. Does it advance access? Does it advance quality? Is it a service line positioning thing or operational efficiency? Are we reducing risks somewhere? And then the second is financial discipline. You know, what are the returns from that? You know, I do start out every, whether leadership update or anything like that, from the finance perspective, that if we don't have patient experience and we don't have quality, we don't have finances. So really, we position those as the most important thing when we're really deploying our capital. And then the third thing is, you know, our readiness on execution. Do we have everything lined up across IT, operations, supply chain, as well as the physicians? Physicians are our partners in this, and they need to all be aligned with this and making sure that we're all rolling the same way. And then finally, through that portfolio is a post-implementation accountability, doing look-backs. Are we able to say that, hey, you know, we said Project X was going to deliver this ROI or operational benefit a year out after it happens? Do we go back and say, hey, was this a good investment? Was this a good use of our capital resources?
Definitely. Yeah, I think alignment's definitely top of mind. Sorry, go ahead, Rob.
Yeah, no, I mean, I agree with a lot of what Brad said there. I think one of the things that we do is we're trying to look out for that kind of maintenance capital, whether it's IT infrastructure or imaging equipment, or we have a relatively big, given the size of our geography, transportation arm. We know those vehicles need to be replaced on certain general schedules. Sometimes you can stretch it a little bit, but we try and make sure that we have funded those core things we need to continue the core important operations. But investment in profitable growth is a real high priority, and being able to analyze new ventures, new locations, those things are a high priority, and move things up on that capital list. But frankly, our capital's been constrained a bit, and we are, because of that, growing a little bit of what I'd call capital debt, in that you have things that are continuing to age out, and we can push the envelope on, but the bill's going to have to be paid, which is why we're working so hard to improve our financial operations in a sustainable way. But I really like the post accountability. That's one of the things that I've instilled since coming to Centra, is keeping a list of what's been approved, when it's coming live, and then going back and seeing, is it meeting the expectations, and if not, what can we learn from that so that we can do a better job understanding how things are going to perform in the future to make better decisions.
Yeah, definitely. I agree. I feel like I don't hear a lot of executives talk about that too much, looking back and, evaluating what you've already done. And I think it's going to be probably even a bigger priority, coming up.
Yeah, that's because it's painful. You have to recognize that you make some bad decisions, and you didn't, right? So that can always be hard for people.
Yeah, no, that's totally fair. So where are you both kind of finding the next generation of sustainable cost transformation opportunities? And what do you think differentiates, strategic cost redesign from just short-term expense reduction? Rob, do you want to go first on this one?
Yeah, so we continue to find a lot of opportunities in some of those standards things that we've been looking at for years, like restructuring of our management spans and layers, reducing, focusing on overhead costs and creating overhead efficiencies through operational improvement. We continue to find opportunities in supply chain, even though Vizient rated us as top performing organization in our 20 organization cohort. We believe we still have significant opportunity to drive improvement. And we have plenty of opportunity to drive improvement in our existing platforms, both like in procedural areas and in our physician offices, to improve access and to better utilize the capital we already have invested. So we're spending a lot of time when it comes to either capital replacement, or, for instance, we've been looking at a new cath lab, spending a lot of time on, well, how are our existing labs performing? What kind of turnover do we have? How are we doing on start times? Can we extend hours? So all those things can be sustainable. And I think the key to make sure that it's not a short-term expense reduction is to really standardize and make sure that you have in place processes to monitor the key performance metrics and to do the standard daily work to operate within those key performance metrics.
Yeah, definitely. That makes sense. Doing kind of, the work around the strategy as well.
Yeah.
Brad, what about you?
Yeah, totally agree with Rob and his take on things. Really just to add a couple things how I look at it. And in times of pressure, if after the pressure comes off and those savings disappear, it's not really transformational. It's more of a temporary suppression on what you're doing. What we've done here at Team C Health, and I'm not everyone's able to do this. I'll give you a specific example, is that not only we're looking at all the stuff that Rob said, clinical variation, throughput, documentation, denial prevention, a lot of stuff that everybody else does in the standard block and tackling. But how we've kind of gone about things is looking at our total portfolio. One of the things we did in the last year is we acquired Arizona Oncology, and we went from a very small footprint in the market to now we're the leader in market share for oncology. And that's really kind of helped us bolster things in the short term. You know, you're not going to have these types of things laying around or that you stumble across. But I think it's just an example that when you're looking at your portfolio and saying, hey, we can't be all things to all people, what do we want to be? And then allowing some of that stuff to help drive that kind of transformation that also relates to the cost transformation of the organization.
No, definitely, for sure. I feel like I've heard a lot of CFOs talking about like growth and expansion recently, which is interesting, like in today's, market with HR1 and everything happening. Yeah. Is that kind of the sentiments you guys have been hearing as well?
Well, for our perspective, it is. I mean, we haven't really talked in our senior executive meetings about doing any type of, labor reductions or anything like that. We feel like we run pretty lean, and, we want to look at this in the short term as an opportunity to double down and really look at how we're doing things and come out the other side of whatever happens with HR1 as being stronger.
Yeah, and from our standpoint, we already have above 80% market share, so growth and expansion is a challenge. There's no competitors to take market from. And so a lot of our actions are really designed more to be defensive and make sure that we're delivering the quality experience and patient experience that need to be delivered in order to keep any competitors, particularly niche competitors, out. But we're benefited from still being a COPN state, so that helps in that area as well.
Yeah. Right, definitely. That is fair. So, like we're talking about, with the continued, uncertainty around reimbursement, particularly Medicaid, and payer dynamics and, government funding, what kind of financial strategies do you think have proven most effective in, protecting your margins without compromising access to your community or your quality? I can't remember who went last. Well, Brad, do you want to go first on this? Or either of you?
Yeah, go ahead, Rob. I took the first two. Was it 2 and 2?
Yeah, I'll do this one. Well, I think to me, one, you don't compromise on quality. Brad pointed out that, he starts his meeting talking about quality and service being core to financial performance. I think it absolutely is. So you can't compromise on quality when it comes to the quality of care. Otherwise, I think, we're really in a leave no stone unturned kind of environment. We want to make sure that the services we provide are those that we want to use for ourselves and our families and our loved ones. But we have needed to compromise on access in a couple of cases. So we recently, at the end of last year, closed our OB services at our Southside Hospital. That hospital is about 60 miles from any place else. It was doing less than 200 deliveries a year. We had locums providers for OB and for pediatrics in order to provide those deliveries. It just was not financially sustainable at the quality level. And same thing with the cath lab we had down there. That just wasn't wasn't either financially viable or viable from a quality statement. So, when volumes get low, you have both financial and quality challenges and concerns, which may mean that providing access is exactly not the right thing you should be doing for your community.
Right. Definitely. I think that's fair. Brad, what do you think?
Yeah, and I think kind of what Rob said too. I don't think really the best organizations or good organizations look at just one lever. You're looking at payer strategy, documentation, revenue integrity, your mix, productivity discipline, and as well as selective growth. It's really about reducing avoidable leakage in that access piece of it. And whether that's through denials, underpayments, unnecessary length of stay, misaligned capital, a suboptimal site of care, or label deployment. It's really about being willing to invest in areas that create resilience as opposed to just ones that just defend against any kind of downside risk that might be out there.
Right. Yeah, no, definitely. I think that's totally fair. And kind of just looking, yeah, at everything kind of through that quality and access lens, because obviously that has to come first. So how are you both thinking about liquidity management differently today than perhaps before the pandemic? Rob,
I
do you
can go
want to
first
go
on this
first?
one. Yeah.
Yeah,
Yeah.
Okay,
Brad,
yeah.
go for it.
Yeah.
Yeah,
Yeah.
sure. I think before liquidity used to be kind of like look at it as a backstop. I think now liquidity, and I don't think anyone is like, it's like anything. How much is enough? I don't think you could ever be too liquid. I think it really is becoming more now, instead of a backstop, a strategic enabler. It used to be looked at as a treasury metric. Now it's how you're
Mhm.
operating strategically, and that discipline that you have. You have to be able to absorb a ton of things from reimbursement delays, payer activity, labor volatility, policy risk in the government level, capital needs. So there's much more ways that we can think intentionally about capital, days cash on hand targets, how we pace our capital spend, and how much cushion we have to preserve being able to have options. So it's really a much more complex thing than it used to be, at least in my opinion. And it really is now. If you have decent liquidity, it really can be a strategic enabler for the organization.
Yeah, and I think
Yeah,
I
that's
think
just interesting.
yeah, how you manage that that liquidity while it's not being deployed is equally as important. So, prior to the pandemic and in the early parts of the pandemic, for the last number of years, the returns that you could earn on short-term capital were relatively low. And now that's increased, making it really important to have better cash forecasting, to think about how you're investing that capital, and to have a better idea of when it's going to be available. So I think that's an important thing. One of the challenges we have, Virginia is a provider tax state, and actually has done very well with Medicaid supplemental payments that way. But that creates pretty substantial volatility between the payment of large tax payments and then when you get those payments back in. So it's a constant flow back and forth of relatively
Mhm.
large payments. And as Brad pointed out, those flows can happen with payer problems, or a billing problem, or something that changes in your environment that causes drawdowns in liquidity. So maintaining adequate liquidity is essential. And as an example, we're doing a relatively major construction project, and I expanded my lines of credit, so that I made sure that we had additional resources available in order to be able to float the between draws on our bond issue and some of the other things that we need to do. But make sure we had, as you have more risk, you want to have more liquidity.
Yeah, definitely. So you guys think it's kind of become like even more of a strategic imperative after the pandemic with everything that's been going on, even more uncertainty.
Well, yeah,
Absolutely.
and unfortunately, I think we're both reasonably well capitalized as far as days cash on hand, but there are some organizations that are, managing liquidity as a day-to-day, pay this bill or not pay this bill kind of thing, and that's a very difficult environment to be in.
It is.
Yeah, definitely. So, like we touched on earlier, we touched on alignment a little bit, and this is kind of something I talk to a lot of CFOs about, how the role of the CFO has kind of shifted into more, strategic, like big picture kind of partner. So, how do you guys both influence alignment within your organizations across clinical, operational, and administrative leaders, especially when difficult trade-offs have to be made, and during periods of like high financial pressure? What do you do there? Um, Rob, do you want to go
Well,
first?
yeah, boy, I think this is one where communication, communication, communication.
Mhm.
It's just a constant teaching and providing, trying to transparently lay out the case for what we know about HR1, and for us, significantly, that's changes to those provider tax benefits that we receive, but also all the unknowns that overcome the potential downsides with Medicaid enrollment, ACA subsidies, 340B, site neutral payments, and helping people to more clearly understand what the environment is going to look like should nothing change, and our need to prepare to do that. And we recently did have a management restructuring that included a layoff, and I think that in many ways has helped our clinicians and others align around things like supply standardization. We've gotten a lot more cooperation, process improvement, using attrition to reduce FTEs, and investigating outsourcing and partnerships that really have made sense for a long time, but we're just not. We had barriers within the organization of people who did not want to pursue and look at those opportunities. So I think both with the impending challenges of HR1 and its resulting reductions, and our personal situation here, that's helped to get people more aligned, and making clear what the metrics are and why they're important, and transparently reporting those throughout the organization, which we hadn't been doing effectively up until about a year ago.
Okay, great. Brad, what about you?
Yeah, no, just to kind of echo a lot of the same stuff that Rob said, I believe too, that really it's our role as CFOs to create, kind of almost be like Switzerland. You don't have a horse in the race. Really, your role is to come up with, common facts, be explicit about constraints, making sure whatever trade-offs have to be made are transparent. I think that people can handle hard decisions better than ambiguous decisions. So if they don't know what is or why it's being made, they tend to kind of stray from the mission of what we're trying to do. Or the other thing could be if they're asked to absorb trade-offs unfairly or unevenly. If you've got someone else kind of taking the brunt of it, they may kind of raise a flag or be disengaged a little bit. But as CFOs, if you're able to have that communication, like Rob stated, to be able to say, here are the assumptions, here's why we're doing it, here's what happens if we don't do it, here are the metrics, and because we do this, we can pull this off, here's what we can improve on.
Yeah, and I think the other thing is helping them understand that, my message is always, I'm not after financial performance just for financial performance.
Right.
I'm after financial performance so that we can afford to replace the capital that you want to in practice, so that we can have access, so that we can recruit people, so physicians and others, so that we can pay people fairly. And that's why we need to do these things. I'm not looking to be on some billboard for the top operating margin in the country. I want to make sure that we can provide the care the community needs and the resources that our clinicians need to provide that care effectively.
That's a great point. I mean, I tell people all the time in the organization, I've said it before at other organizations, but especially at an independent facility. But when you're a non-for-profit, you don't have shareholders that you're trying to hit a certain target for. Everything that we do, everything that we earn goes back into the people and the technology to improve healthcare in our communities.
Definitely. And I like what you said too, Brad, about kind of people kind of being or being more comfortable with hard decisions versus just uncertainty or just that ambiguity. Like a lot of the time, that is scarier. Right. Do you think as CFOs, you guys are kind of in a position where you have to kind of teach finance to the organization at a broader level now?
I do. I mean, and honestly, I kind of like it. I don't think there's any bigger compliment that, if you're in a leadership meeting or you're in a venue where you're explaining either the financial results, but there is no bigger compliment than someone says to me, hey, you explain things in a way that I can understand it. You don't talk in terms and this and that to me, because the way I look at it, if you put me in a clinic, it'd be a complete disaster. I don't have any idea what all those people do and how they do it. And I look at it as my obligation to meet them more than halfway and be able to kind of bridge that gap, so they're not worrying about finances. They understand they know enough what they need to do on a daily basis, and they feel comfortable being able to talk and reach out if they need help.
Yeah, I think that is so important, and I agree with you. It is when somebody says, I've never been able to understand that, but the way you just explained it resonated with me, or I understand it now is kind of the greatest compliment. But it really is helping people understand, the numbers we deal with in healthcare are big numbers. As I
Mhm.
said, we're a $1.4 billion organization. We have 800 million in investments, about 230 days cash on hand, and people were wondering, well, why are you worried about uh, the operating performance, and helping them understand that money's there so that we can weather severe storms, but we need to handle the small ones ourselves and deal with that. But I love being able to tell them, hey, we've got 233 days cash on hand, and what that means is that we can go 233 days without collecting a dollar and still pay you all and still pay all of our bills. And what that gives us is security to know that we can weather these upcoming storms as long as we're proactive in getting there. So, I think how you tell the story and telling it over and over and over again and thinking about different ways to relate it is really important.
Agreed.
Yeah, definitely. I love that. I love that mindset of just like you get to be a teacher, like you get to explain and make everyone understand. What For our next question, I want to ask, what is the financial risk that concerns you both over the next 3 to 5 years, and what proactive steps do you think that you're taking to mitigate that risk, if you can, before it becomes a significant challenge? Brad, do you want to go first?
Yeah, I think it's a combination of a bunch of things. I think it's reimbursement pressure, obviously with HR1. You have increasing friction with payers because they're under pressure as well. I wouldn't say as much pressure as we are, just personally. That's my feeling on that. You have labor cost inflation that continues to increase, and then capital constraints. You have all this stuff hitting at the same time. Any one of those is hard to manage on its own. And the danger is that when you've got multiple headwinds, it really compresses any your ability to respond, because now instead of just looking at one thing, you're split in 4 or 5 different directions. And that's why I really think resilience has got to be built in advance and developed as things go through governance in your organization, making sure you've got improved revenue integrity. It's a design, it's a discipline that you get up every single day. And those people in those areas are really focused on collecting every single dollar that we're owed as an organization for all the great work that our clinicians do. It's disciplined capital allocation. And then finally, redesigning our operating model so that operating model really addresses not only the current reality, but what we perceive to be, in the next couple of years, where we think we're going to end up in the next couple of years.
Yeah, so for
Right.
me, but by far that biggest concern is the results of HR1 by 2030. If it gets implemented as planned, we will have 50 million less in Medicaid reimbursement. So that's a really significant. We've done a lot of work internally, but we've also engaged a national consulting firm to help us with transformation. Not just, again, driven by our need to improve financial performance, but we also need to, we can improve access through improving the templates in our physician practices and improving their productivity, redesigning their work to make it easier, helping them adopt and successfully perform with ambient listening and those kind of things, as well as our quality and patient satisfaction. But as we looked at our opportunities, they really are in many places. They're improving access, improving efficiency of those procedural areas, improving our revenue cycle performance, looking at performance of each unit and whether they're performing at a appropriate productivity level, and having discipline around all of those things. So we're trying to get ahead of it now because our payments will be about the same next year as they are this year, and then they start falling off pretty dramatically, and we need to have those changes implemented by then so that we're in position to weather long term and to be able to continue to drive success and buy the capital and replace the facilities and do the things that we need to do for the community.
We're no different. We've been doing that work already, trying to get positioned. And then I think once we get out 5 years to 2031, that fully impact for us is about $89 million. So it's crazy for everybody.
Yeah. We're 100 million by 32. So it's enormous. It's enormous.
Yeah, no, definitely. I talked to a lot of CFOs, about pressures around Medicaid, but a lot of them have said that just partnerships and collaborations will probably become like much more common, as everyone's kind of fighting their way through this. So yeah, I think that's definitely something to keep in mind.
Yeah, and that's the kind of thing that drove our joint venture for behavioral medicine hospital and rehab hospital, is that we were in very ancient facilities and we weren't delivering to the community what the community needed, but we couldn't really afford the capital on our own for that piece of the business. And frankly, we're not as good as operating those as the national operator we chose. And so, I think there's a lot of areas where some organizations have been very parochial and thought, well, only we can do it. Nobody can do it like we can. And yet these niche players really can do it better than most of us can do it on our own, because that's their sole focus.
Yeah, definitely. I think that's a big thing to admit too, like where your limitations are when you can, step into different partnerships and realize they can really help us. They can do this better than we're doing it right now. So if both of you, say you're advising another health system CFO on building durable financial resilience over the next decade, what do you think is one lesson that you've learned through experience that has really fundamentally changed how you approach a strategy, growth, and long-term stability? If you can boil it down to one lesson, what do you think it is there? Rob, do you want to go first?
Oh, sure. This is one of the harder questions you've asked us, I think. But to me, it's really putting in the standard work, the standard processes, and executing those on a continual basis. So, early on, Brad talked about having a look back process to constantly be improving the way you look at strategic decisions, and did it turn out like we expected it to? What did we miss? Did a competitor respond in a way that we didn't expect? Those kind of things, putting in processes where you have somebody who's deliberately making the case against what you're looking at doing to try and raise those kind of issues ahead of time. When it comes to operational things, do you have, thinking about productivity management, do you have good daily practices and hygiene for people to make sure that they're looking at their productivity? And if people are missing that productivity, do you have a reason? Do you understand why that is? And if it's a temporary blip that's justifiable or not? And what are you doing to coach around that and to get them to meet the targets that they need? I mean, it's just discipline. So that kind of standard work, standard process around all of your practices, I think, is probably the most important thing I've learned to success.
Yeah, I agree with that. For me, it's more of an operating philosophy. It's not a reaction plan. That, the biggest lesson that I've learned in my career too is that, you have to build resilience before you need it, not only personally, but in an organization. You can't wait for the shock to start before you tighten governance or tighten capital discipline or clean up revenue leakage, or just have discussions and alignment around trade-offs. By the time that pressure gets there and it's visible, I think that is really the differentiator in organizations and how they can adjust and be resilient through different things, is whether you've built that into your system as kind of everyday hygiene and habits that really it allows you to respond quickly and intelligently to things.
Mm-hmm. Of course, now we're in a situation where if you haven't done that, you're doing it while the bus is moving down the road, right?
Right. Exactly.
A little more hectic like that, yeah.
Yeah.
Definitely. Well said, both of you. Awesome. Well, that was our last question. Thank you guys so much for an excellent discussion. So now this is going to bring us to the Q&A portion of our program. So now we're going to invite our audience to ask questions live to our panelists. So just a reminder, if you're participating in our live program, if you want to submit a question, go ahead and click on that little Q&A widget at the bottom of your screen. It may already be open and appear on the left side of your screen. And just note that your questions will remain anonymous and won't be viewed by the other audience members. So we'll give that a minute and see if any questions roll in here. We don't have any just yet. I did have a question for each of you, though. If you're walking away with one key takeaway from today's discussion, what do you think it is? What has stood out to you?
Go ahead, Rob. No, I don't throw it to that's dirty pool. I don't have a thought, so I'll throw it to someone and put them on the spot. No, I'd say really for me, it's the financial resilience, especially sustainable stuff. It's not about being more conservative or being cautious. It's about becoming more intentional from what you're doing. You want to build an organization that can take a hit, could take a blow, could take a couple of blows, and still recover quickly, while investing in the future and still keeping, sight of your mission, quality, in the community. That's really, for me, the goal.
Right.
Yeah. That is really interesting. I saw something on LinkedIn from Juniper Advisors that talked about the cycle that keeps health systems from growing, and they talked about how you get in this cycle where your operating performance slips, and therefore you constrain the amount of capital that you're deploying, and you work on your operating performance. But by the time you've fixed your operating performance, you've lost market share, or you've lost position related to others who've continued. So that ability, that resilience in being able to continue to invest when others can't, can be a huge, particularly in competitive markets, is a huge benefit. I don't know that there's one thing, but I've just a couple of things that have really struck me as we've had our conversation. One is the importance of storytelling, and again, that constant communication as CFOs and organizations having to. People don't. Sometimes we think that people can read our mind, and they think that they can understand. The only way people understand what we're thinking and what's important is if we share with them our view on what we're thinking and what's important, and we back it up with data. And so I think that in helping bring everybody together in a common mission, and not overstating it. They used to talk years ago about, having to create this burning platform and et cetera. And sometimes people would seem to throw gasoline on it to make it burn brighter than it really was burning. So I think it's important to recognize the good things and the possible risks and changes that could go in a positive way, while still making it very clear where the risks are indicating things are going. So, that communication piece, I think, was really driven home as we had our discussion.
Yeah, definitely. I definitely agree with that. It's like CFOs as the storytellers of the organization. It's definitely something to keep in mind. We do have a couple questions coming in now. First question for Brad. What is the number of days cash on hand for TNC?
Oh, great question. We're at about 140, 150, up through before the oncology acquisition that I mentioned. We were really struggling in that area, and you kind of give me a little PTSD there, Rob, about being nervous and stuff, and worried about stuff. We had gotten down when some of the payment delays and some of the stuff that got off the federal government, we had dipped down to 80, 85 days, but we've really made improvements there, and our goal is to be aspirational, Rob. We'd like to get to around 250.
Okay, great. Our next question is, Have either of you started utilizing AI models in your organizational strategies, and has the AI suggested pathway been different than your thought process? It's a good question.
So yes, I mean we've started using AI models. We have actually a new chief digital information officer who's just come, and he's introduced us all to Copilot, and so we're experimenting as executives with that, and some of the things are pretty amazing. I've got some of my teams who are using some of the models to do some analytics, and we're certainly partnering with to obtain products that have significant AI elements to them. I mentioned briefly ambient listening in the physician offices, which is pretty common now, but we've also contracted for some patient flow products that will help us using AI, and using AI in places like CDI and appeals, and some of those other things. My current concern, though, is that starting to read a lot about how the cost of AI is going to dramatically increase, and the companies that are like Anthropic and OpenAI, who've been supporting free and near free models in order to gain users, are starting to increase the charges for those, and it'll be interesting to see how that develops, because certainly their costs are also increasing dramatically as they compete for memory chips and the other things, processing power and energy and water and all the things that are necessary for them to produce all that computing power necessary to support AI. So it's going to be interesting. I was very, very optimistic about AI and its potential, and have gotten a little less so as some of these other factors have started to weigh in.
Yeah, I agree with you, Rob. They set the hook. They set the hook with the kind of the freebie, and all of a sudden you're hooked on it, and then all of the cost starts going up. That is definitely a concern. One of the things that I did recently is that we're looking at a strategic acquisition, and something that would have probably taken me a couple of days. I had a whole bunch of documents, from PDFs to Word documents to valuations and Excel models and stuff, kind of put everything in and had it do an analysis for me. And it just kind of did that on a Sunday morning and let it run, and then came back and kind of took a look at it. It was very similar to the way we were thinking, but it allows you to take a whole bunch of different things and really distill it down to some things you can stress test a little bit easier.
Mm-hmm.
Yeah, and that stress testing piece is so important, because you can get the hallucinations and other things, and making sure you validate. But I agree with that. That's what we're seeing, is you can take this vast amount of information and boil it down to a few key elements, and having processed that independently without AI, sometimes you'll see it pick up things that you didn't pick up, or just a little different view on those that help expand your understanding of the situation.
Yep.
Definitely. Those are great insights. AI is always a hot topic. I am not seeing any more questions in our chat. So for today, we can go ahead and wrap up. So thank you guys both again for an excellent discussion. I feel like I learned a lot. To our audience, just remember to follow along all week for continued coverage on sustainable financial resilience, and you can visit on our website, healthleadersmedia.com, for that. So one more time, I want to thank Brad Hipp and Rob Tonkinson again for just an excellent discussion. And thank you to our audience for participating. We really hope you enjoyed today's program, and we look forward to seeing you at the future Winning Edge programs. So that concludes for today. Thanks.